Okay, let's unpack this. You sent us a deep dive into Global E Online, ticker GLBE.
Right. We've got this detailed report from Wealth Scoop Analytics, plus, recent earnings calls, analyst reviews, market chatter, the whole lot.
A nice stack of material. So our mission today, basically, is to sift through all
Yeah.
this and pull out the really important stuff. Understand what Global E Online actually does, how it's performing.
The future might hold, maybe.
Exactly.
Yeah.
And crucially, what your sources say about it from an investment perspective.
Got it.
So let's just jump in, because honestly, what's fascinating right off the bat is how GLBE is trying to tackle this, incredibly complex, kind of messy world of global e-commerce.
It really is complex. And yeah, that's spot on if you've ever tried to buy something online from a store in another country.
Oh, yeah.
Or maybe worse, if you're a merchant trying to sell something globally. It's not as easy as you think it should be.
Not at all.
And Global E Online, they were founded back in 2013, headquartered in Israel. They exist, specifically to solve that exact problem.
Yeah.
The sources really paint them as this platform designed to just remove all those friction points in selling across borders online.
So enabling merchants to go global, but quickly and without the usual headaches.
Precisely. Think of them as the a kind of invisible plumbing, the infrastructure that makes international online shopping feel local.
Okay, so they smooth out the bumps.
Yeah.
But how? According to the material, what's the actual mechanism? What are they doing?
So the core of it is their platform, Global. It's described in the sources as integrating global enablement, intelligence, and demand.
Okay, enablement, intelligence, demand. What does that actually mean in practice, though?
Right. So in practice, it means they handle pretty much everything needed to localize the shopping experience for the customer. If a shopper in France visits a U.S. merchant site, GLBE's platform kicks in. It can show prices in euros, offer local payment methods, maybe Carte Bleu, things people recognize and trust. It can even translate some of the content.
Got it. So the customer-facing stuff.
Yes, but it goes, quite a bit deeper. They also manage the really complex operational side.
Ah, okay. The back-end stuff.
Exactly. Things like calculating and handling duties and taxes. That's a big one. That falls under the compliance with local regulations bit mentioned in the sources.
Which must be a nightmare to keep track of.
Totally. And they manage international shipping logistics, coordinating carriers, and even processing international returns, which is another huge pain point.
Right.
So the real insight here, I think, from the sources is that by taking on all this complexity, their core value proposition is just dramatically boosting conversion rates for merchants selling internationally.
Because they remove the reasons a foreign shopper might just abandon their cart.
You got it. All those little doubts or hurdles, they try to smooth them away.
That focus on boosting conversion.
Yeah.
Yeah, that makes a ton of sense for any merchant.
Yeah.
And it seems like this approach, it's attracted some pretty major partners. I mean, the Shopify partnership gets mentioned a lot, and that's recently been extended, hasn't it?
Absolutely. The sources are really clear on this. They explicitly call the long-term extension of the Shopify partnership a key strategic driver.
And why is that so significant? Just the size of Shopify.
Well, size is part of it. Shopify is massive, obviously, but it's also the integration. It allows merchants already on Shopify's platform to just seamlessly plug into GLBE's cross-border capabilities.
So it's like a ready-made channel to reach potentially millions of businesses that might want to expand globally.
Exactly. It lowers the barrier for those merchants significantly. And the sources also note, GLBE works with over 400 global brands and retailers already.
Wow, 400 plus in.
Yeah, serving customers in more than 200 destinations, operating out of, I think, 7 offices worldwide. So this widespread adoption, plus that strategic integration with Shopify, it seems pretty critical to their whole model.
Okay, and beyond the partnerships, who are the people running the show? The report mentions the founders, right?
Yes, it does. The company was founded by Amir Shlachet, Nir Debbi, and Shahar Tamari.
Okay.
And your sources identify Amir Shlachet as the current CEO, Nir Debbi as president, and Shahar Tamari as the COO.
And they have relevant experience.
Seems so. The material sort of emphasizes their combined background in tech, payments, and business development as being pretty foundational to building this whole platform.
Makes sense. And they've also managed to attract some serious financial backing along the way.
They have, yeah. The sources list some notable investors: Apex Partners, Red Dot Capital Partners, DHL is in there, Vitruvian Partners.
DHL, interesting. Logistics connection.
Right. And a particularly interesting point the sources make is that when GLBE went public, that was May 2021, so about 4 years ago now.
Okay, 4 years, not 5. Good clarification.
Yeah. Shopify themselves actually acquired a 6.5% stake.
Ah, so not just a partner, but an investor too.
Exactly. And the sources seem to view this as more than just, a financial investment. It's seen as a pretty strong vote of confidence from a huge player in the whole e-commerce world.
Yeah, that definitely sends a signal.
Yeah.
Okay, so they've got the platform, the people, the partners, the backing. Let's get to the numbers. How has Global E-Online actually been performing financially based on those recent earnings reports you looked at?
Performance, especially recently, looks quite strong according to these sources. If we look specifically at the first quarter of 2025,
Okay, Q1 25.
revenue came in at $189.9 million.
Okay, nearly $190 million. How does that compare?
That's a 30% increase compared to the same quarter of the previous year.
30%. That's pretty solid growth.
It is, and notably, it also exceeded analyst expectations for the quarter.
Okay. And what about the actual volume of stuff being sold through their system, the GMV?
Right. Gross merchandise volume, GMV. In Q1 2025, that was $1.24 billion.
You lean with a B. Wow.
Yep. And that's up 34% year over year.
Okay, so GMV grew slightly faster than revenue, 34% versus 30%. What does that suggest?
It suggests, healthy activity. The volume expansion itself is a really key driver for them, maybe indicating a strong uptake or larger transactions.
Makes sense. And profitability.
Mm-hmm.
Because, growth is great, but eventually you got to make money.
Precisely. And that's a key point here. Adjusted EBITDA, that common measure of operating profitability before all the interest, taxes, depreciation, amortization.
Right. Yeah.
For Q1, that was $31.6 million.
Okay. And the growth there?
That was a 48% jump year over year. Pretty significant acceleration.
Yeah, 48%. That pushed their margin up too, presumably.
It did. Their adjusted EBITDA margin hit 16.6% in the quarter, and earnings per share, EPS, came in at $0.19, which, again, significantly beat analyst estimates.
Okay, beating estimates on revenue and earnings. Yeah. We mentioned profitability. Was there a bigger milestone there?
Yes, a really important detail from the sources. In 2024, so last year, Global E-Online achieved GAAP profitability for the first time as a public company.
GAAP. Generally accepted accounting principles.
Exactly. So hitting profit under the standard formal accounting rules, that's a really significant operational and financial milestone for any company, especially one still in a high growth phase.
No doubt. Achieving GAAP profitability is definitely a big step. Okay, so strong recent results. What about looking forward? What does the company's own guidance suggest for the rest of 2025 based on the earnings calls?
So based on the summaries in your sources, they are guiding for continued, pretty solid growth.
Right.
For the full fiscal year 2025, they're anticipating revenue between $970 million and $967 million.
Okay, quite a range, but let's take the middle.
Right. If you take the midpoint of that range, it implies revenue growth of roughly 25% compared to 2024.
Okay, so maybe slowing slightly from that 30% in Q1, but still aiming for 25% growth for the full year. That's still pretty aggressive, especially on a larger base.
It is, yeah. And they're also projecting to maintain GAAP profitability for the full year 2025.
Maintaining GAAP profit, okay. Any other milestones they highlighted?
Yes. Another key one specifically mentioned is that they expect to cross an annual revenue run rate of $1 billion in the second half of 2025.
The billion-dollar run rate.
Exactly. Which, basically takes recent performance and projects it out for a full year. So it indicates their current sales momentum is pointing towards hitting that billion-dollar mark pretty soon.
Crossing the billion-dollar run rate. Yeah, that's definitely a big psychological and operational marker. Okay, so the numbers look robust, the guidance is positive, but operating in this complex global landscape, it can't all be smooth sailing, right? What challenges are mentioned in your sources?
That's definitely where the complex world part really bites. While the overall outlook presented is, generally positive, the sources absolutely point out significant challenges.
Like what?
One big one is the increased uncertainty and, frankly, volatility surrounding global trade policies. Think import duties, tariffs.
Stuff that can change pretty quickly depending on politics.
Exactly. And those changes can directly impact the cost structure for GLBE's merchants and potentially dampen that cross-border demand they rely on.
Yeah, sudden tariff hikes could definitely create headwinds, you'd think.
For sure. And beyond just specific trade policies, there's the broader macroeconomic volatility that everyone's dealing with.
You mean things like inflation, recession fears?
Right. High inflation in key markets, potential recessions, even geopolitical tensions. All that stuff can reduce consumer spending power or just make merchants hesitant to invest in expanding internationally right now.
So those are identified as real ongoing risks they have to navigate.
Yes, very much so.
Okay, so those are the potential downsides, the clouds on the horizon. What about the opportunities going forward, aside from just, the general growth of e-commerce itself?
Well, despite those challenges, the company itself, according to the earnings calls, reports a very active sales pipeline.
Okay, so still strong demand for merchants.
It seems so, indicating continued strong demand for these kinds of services. And, as we already discussed, that strategic impact of the long-term Shopify partnership extension that's seen as a major, major driver going forward.
Right, broadening their reach.
Significantly. So your sources generally seem to see GLBE as being pretty well positioned to capture a larger slice of this growing global e-commerce pie, precisely because they offer that essential sort of wraparound service that simplifies the really hard parts.
So the challenges are definitely present, but the analysis you have suggests the momentum and the opportunities, especially those strategic ones like Shopify, maybe outweigh them.
That seems to be the general thrust of the analysis provided, yes. Balancing act, but leaning positive.
Okay, let's turn then explicitly to the investment perspective. Your sources dig into this. The Wealth Scope report, for instance, calculates the performance of an investment made way back at the IPO, right?
That's correct, yeah. It looks at a hypothetical $1,000 investment made when Global E-Online went public back in May 2021.
Right.
And using the midpoint IPO price, which was $24, and comparing it to a recent price mentioned in the sources, around $31.08, that $1,000 investment would currently be worth approximately $1,295.
Okay, so about a 30% return over roughly 4 years.
Roughly, yes. A solid return over that period.
Okay. So that's looking back. What about looking forward? If someone's considering investing now, maybe thinking about the next, say, 3 to 5 years, what's the general sentiment? What's the outlook presented by the analysts cited in your sources?
The analyst sentiment, based on this collection of sources, seems generally bullish regarding the future prospects.
Bullish, okay. Any specifics? Price targets.
Yeah. As of early June 2025, the average analyst price target for the stock is cited as $48.81.
48.81. Okay, compared to the current price, around $31.
Right. And the range is actually quite wide. There's a high estimate mentioned at $64.
Wow, okay.
And a low estimate right around the recent price, actually, at $31.
That's a very wide range. But that average target, $48.81, is significantly above the current price.
Yeah.
That suggests quite a bit of confidence in future growth from the analysts.
It does seem that way. I mean, just doing the math based on the numbers in the sources, that average target implies a potential upside of approximately 57% from that $31.08 price.
57% upside potential.
Yeah.
Based on the average target.
Yeah. And obviously those higher targets, like the 64 to 4 one, suggest potential upside even exceeding 100%.
So what are they basing that optimism on, according to the sources?
It seems the analysts are factoring in the company's pretty consistent growth track record that we talked about, the positive guidance for the rest of 2025, and the strategic importance and potential leverage from partnerships like Shopify.
But there's always a but.
Always. And it's crucial to remember, and the sources themselves point this out, these targets are based on assumptions and models. They aren't guarantees. And investors really need to be fully aware of those risks we discussed earlier, namely, volatility in global trade policies, broader macroeconomic headwinds, and of course, competitive pressures in the space.
So the investment outlook presented is generally attractive based on this perceived growth potential and the analyst targets, but it's explicitly framed with those very real operational risks. You have to weigh both sides.
Absolutely. That balance is key.
And what about the market chatter, like social media mentions or forum posts calling the stock a steal under a certain price? Does that factor in?
Well, the sources do capture some of that kind of market commentary, yeah. Which does indicate, a certain level of optimism among some retail investors or traders.
Sure.
But as the material is quite careful to note, that kind of chatter really just reflects individual opinions and sentiment. It's absolutely not formal financial advice.
Right, as part of the background noise, the context.
Exactly. It's part of the overall market context, but the core investment case presented in the professional analysis is built much more on the underlying business performance, the guidance, the strategic position, all the stuff we've been discussing from the reports you provided.
Absolutely. It's about looking at all the different pieces in the puzzle that are presented in the source material.
Precisely. The reports and reviews you shared give you those hard data points, the numbers, the milestones, the guidance, but they also provide that really crucial context of the operating environment
Mm.
and the potential challenges the company absolutely has to navigate successfully to realize that potential upside analysts are talking about.
Okay, so let's try and wrap this up. What does this all mean?
Yeah.
We've taken a pretty deep dive into Global E Online, GLBE, based on all your
We
sources.
have.
And we've seen that since it was founded back in 2013, it's definitely carved out a significant space for itself. How? By directly tackling those huge complexities of cross-border e-commerce.
Right, making it dramatically easier for merchants to actually sell their stuff globally.
Yeah. And the sources highlight pretty strong recent performance, that impressive 30% year-over-year revenue growth in Q1 2025.
And hitting debt profitability in 2024 for the first time. That was big.
That was a big one. Plus solid guidance for the rest of 2025, including aiming to cross that $1 billion annual revenue run rate milestone.
Yeah, key markers. And we touched on those strategic partnerships, especially the extended relationship with Shopify, which really looks like a key accelerant for their growth path.
Definitely seems critical.
Yeah.
But as the material is very careful to point out, operating across all these different borders,
Yeah,
it's inherently challenging.
absolutely. Risks like unpredictable global tariffs, macroeconomic volatility, those are just ever-present realities they have to deal with.
Yeah. So for investors looking ahead, maybe the next 3 to 5 years, the sources seem to present a generally bullish analyst view, right? With considerable potential upside based on those price targets.
But explicitly balanced against the need to really weigh those very real risks that were mentioned. It's not a sure thing, obviously.
No, never is. It's about understanding that potential reward versus the stated risks.
Exactly.
So this whole discussion erases a really important question for you, the listener, to consider. Given that global trade seems likely to become even more complex, not less, in the coming years,
A fair assumption.
and the digital marketplace just keeps expanding relentlessly, how might companies like Global E Online need to adapt their fundamental approach? Not just to facilitate seamless transactions day to day, but maybe more importantly, how do they build resilience? How do they protect themselves and their clients against unpredictable international policies and sudden economic shocks down the road?
That's a great question. How do they build that adaptability and shock absorption into the core model? Something to think about.